All attendees are in listen-only mode.
Good morning, everyone. Hang on here a second while I get you my monitor. Oops, I'm clicking the wrong buttons. um, there we go. All right, you should be able to see my monitor. The market just opened up. Of course, yesterday we had a bit of a wild ride. Today being Friday, not so sure what to expect out of today. It's not unusual to see the market kind of consolidate a little bit on Fridays. We'll take a closer look here in just a moment. Okay, somebody was having difficulty logging in, so I just want to make sure they have their stuff. Market bouncing back and forth a little. Let's take a look. Well, here, let's take a look at the Eagle. Why not? So here's the NASDAQ on the Eagle. We see we've made a little bit of a decline. So prices have come down a little bit. We're forming a bottom. We've got a ways to go to yesterday's lows, however. I want to show you a little something on yesterday's chart. Just a second here. I got to build a new chart. Okay, so here is the daily chart for the NASDAQ. And you're going to notice a couple of interesting things. And I hope this shows up because I've got a yellow trend line on a white background. So this is more or less the trend line that the market's been making. Actually, we did have a couple of lows right here that I never noticed before. Let's shoot the trend line that way. Oh, that's much better. Okay, so you can see we're actually settled right on the trend line. Now, normally this would make the market bounce a little bit. So we can either expect it to go a little bit higher, but we're also making lower lows, or pardon me, lower highs, which means we should be making a lower low. Now we broke it ever so slightly yesterday, but it's not like seeing the market actually come down, make a proper low, and then go back for a test of the extreme, and then just take off lower. So a little bit of a puzzle today, whether we should expect to see the market rally and respect the trend line here, or whether it should continue lower and give us a proper low showing us that there has been a true change in trend. So that's kind of what's going on in the NQ today. Oh, looks like they're making a press for the upside there. A little bit of a rally right out of the gate. I'm also watching, I've got the British pound up today, and of course crude oil. Oh, I should put the mini crude market back. Let's take a look at mini crude today. While that's loading, here's the pound on the Falcon. And a little bit of a run up from the pound right off of the primary support. It looks like it turned on its heel, ran up through the primary resistance. That should get it to the next resistance area. Oh, ever so close. And here we are back at primary resistance. So the market falling down, recovering a little bit, but now we're getting this waffling again. No real signals, at least not on the Falcon. I'm sure the Hawk picked up a couple of those moves. Okay, here is mini crude, E-mini crude. Uh-oh, and I think I just stacked all my charts. And it looks like we're working on a little bit of a trend change signal here to the downside. The trend line has changed color. So now we need that up pattern and come back with the down. Oh, all right. Hans is in the room. Welcome, Hans. Hold on a second here while I rebuild my charts, because this hasn't happened for a while. There we go. Okay, Hans is asking about the Raptor. He says, Eric, I just bought the Raptor. Well, congratulations, Hans. I see in your NQ Raptor screen that you've got the filter settings for 8 ticks, 10 ticks. I've got 8 ticks and 12. How do I change that, and what does it mean, or what does it measure? Okay. What Hans is referring to is down here, the filter. I've dialed it down to 10 ticks. Now, whether it's set at 10 or 12, it's really not going to matter that much. The other week when the NASDAQ was being so stubborn, you know, we were seeing a lot of day breaks like this, where there wasn't a whole lot of activity between the days. And so to accommodate that, I actually dialed down the filter size a little bit. All right, so how do you do that? Well, you go here to your indicator panel. You can right click, or you can hit the indicator tab up here. And then you highlight your Raptor filter, and right here yours is going to say 12. I changed mine to 10, but like I said, 10 or 12, it's not going to matter that much. The nice thing about the Raptor is that it is a little bit more customizable. You can't change anything on the other tools, but you can change change up the Raptor a little bit more, make it perhaps a little bit more sensitive to the market that you're following. If you chose to change the cloud size, this is where you would do that. I've left it at the standard 12 for the time being. And if you'd like to change anything else on the Raptor, you can change the brick size here for the Hawk portion of the Falcon. Currently it's set at the default 6, which seems to be working pretty well. All right, so that's how you can tweak your Raptor. When everything is to your liking, you can click Apply and close it out. Now to adjust the brick size itself, see here how I'm set at 8 ticks, you're going to go to the next tab here, the one called Data Series. And you'd like to see that that one is set at 8 ticks. By default, I think it goes to 5. But we've been working off of the default brick sizes for most of the markets. All right, so that's how you do your customize your settings. The filter down here is actually the Eagle Trend Trader. It's all been programmed into this filter bar. So by adjusting the brick size down a little bit, I've slightly increased the sensitivity of it. Okay, we're still moving a little bit sideways. Looks like the NASDAQ again at odds with the rest of the stock market. And I think Jim is getting all over this one. This is one of Jim's signals. Speaking of the Raptor, let's see if I can throw one on here to demonstrate. Okay, so we get the sell. And we're going to run a slightly bigger stop. Oh, it's essentially a failed buy signal off of a yellow bar. Right, so we're getting a buy, a yellow bar, and then a failure. And Jim will correct me if I'm wrong on this, if I've misinterpreted it. I haven't had a chance to follow it up as much, but it's been very enlightening. All right, well, we'll come back to that. We'll see how that works out here on the Raptor, or the Raptor, doggone it. You see, I need a break. I'm starting to mix up all the birds, tripping over my tongue. Okay, we're trying to get a trend change signal here to the downside. So here's the portion that has changed the trend line color from green to red. Here's the counter trend portion. We're looking for the sellers to come back. If the sellers come back on that, that would be a pretty good selling opportunity. No, now we're working on a trend change to the upside, so we're actually getting conflicting signals now between the Raptor and the Falcon. It's still early though, and it is, of course, quarter to the hour, which is my absolutely least favorite time of the day to trade. Because it seems that about 15 minutes into the session, the market throws you a knuckleball, a signal that should work out, but one that doesn't. Here's a green bar sell. Now with the green bar sell on the Hawk, of course, you know that you can trade it either as a with trend signal or a counter trend signal, or perhaps even just as an early warning signal that if this market fails and heads above that high, then we are going to see a trend change and the market move higher. And of course, if it continues lower, we should get a first micro-macro cross sell. So don't ever feel pressured that you have to do anything with the green bar sell or the red bar buy on your hawk. Oh, we did come back with the trend change signal here on the Falcon. Now I'll show you something. You see how we've gone out of sync here for a few bars? The fact that we have the lower swing high, I might have ignored the fact that the trend line went out of sync there a little bit. Knowing that it increases the riskiness of the trade because it's no longer a pure signal, but we have that lower swing high, which suggests that prices are going to head lower. We should get another signal, or you could also treat it, I suppose, as an early trend change signal. All right, so a nice little decline there. Oh yes, that's what you call it. James calls this little formation here, and I think it's the best name for it, a long short, a yellow bar long short. So you get a yellow bar printing a buy signal along with a buy signal, and then it fails. And you set up to take it below that failure bar right here. I'm going to figure out some way to give Jim the credit on this one, because this one's definitely going on the Raptor cheat sheet. So you get that yellow bar with a buy, it reverses, you get the failure. And you can see that had pretty good follow through. Well, so far anyway. Now we're right back in the same neighborhood. It was enough to reach our profit objective anyhow, which is sometimes as much follow through as I care for. Oh, more conflicting signals. Oh, dare we double dip? Here they come again with the same formation. Still making lower swing highs. I'm not a big fan of double dipping. I don't know, maybe it's just me. We'll throw it in. We'll see how it plays. See, the lower swing high is encouraging. We do have a lower low. It poked through here. We know that when we break an area of support like this, that we should see two moves in the direction of the breakout. The problem I'm having is that technically the market is still in an uptrend. You see here on the eagle, and we're getting a red bar buy off of the hard edge bounce, which we know to be a strong signal. Right, so that's a little problematic for me. If, in fact, I'm debating taking a second push on this one. We'll see how it plays out. You see, when a market commits to a signal, like the Raptor did here, where was it? Right here. Okay, so we sold here. right? The market waffles a little bit, comes down. We should have seen more commitment to the signal. It's okay to see a little bit of a pullback. It's even okay to see this type of reaction, but you know, the fact that we didn't go a little bit deeper and then get a little hiccup and then go and then see a bigger retracement, which seems to be the typical pattern that the market makes. Kind of suggested that there wasn't going to be much follow-through off of that one. Besides, I suppose, even though that yellow bar long short is a good idea, we did have a double pullback here into the hard edge, right? And that's equally as strong a signal. So you get that double pullback into the hard edge, then the market comes out and it wants to put in a little bit of a rally. So that's where we're at right now. Let's see if I can get in on a buy signal. Oh, here's one right near the high. I was just about to go look at the other tools, but we have a buy op right here. And because this market is very much sideways, that's probably the best place to put the stop. And the Falcon giving a corresponding trend change signal. Trend line changes color. Here's the up, here's the down, here's the up. The signal is printing near the top of the formation, just where we like to see it. Okay, well, they're retreating a little bit. So here on the Hawk, notice we're introducing a lot of yellow bars again. When I start seeing that mess of yellow bars, I don't want to play. It's just too messy. Okay, here we're going again with the Falcon. We're getting the warning dot. We're likely to get the triangle and hash mark once again here near the highs. No, and here they come again with the red dots. All right, well, there's the buy signal. We're going to have a similar buy here on the Raptor. Oh, and I should be using, let me go back to the Falcon. I'm going to use a stop limit order here to avoid any nasty slippage. Now what the stop limit order does is it presets how much slippage I will accept. A lot of times when the market does one of these types of things, it may end up gapping. It's actually kind of rare for the NQ to gap or give us a severe slip, but I don't know, the last couple of weeks we saw some pretty nasty slippage to the tune of 4 or even 5 ticks in the NASDAQ. Very unlike the NASDAQ. All right, well, we can cancel all those. Okay, so we had a red bar buy right here. I thought about going in with a just a little quick hit and run. Let's see if it gets to the profit target or not. If it doesn't, once again, this is our counter trend signal for the hawk. We could set up to sell the failure. The nice thing about this is we can pretty much cover it above the high. Right? So if the market does bring us in and isn't through waffling yet, we know that if it trades above this high, then we are definitely on the wrong side of the trade. Here comes another red bar buy, at least the warning dot. That would be something if it held that same support level. Come on, you guys. Press it. Oh, look at this. Scott's saying the NQ could be building a 4-arrow consolidation. I tend to see the I see what you're saying here, Scott. 1, 2, 3, 4 arrows. I tend to see the 4-arrow consolidation more with trend, though. The way the market is right here, our bands are already turning over, so I wouldn't be as aggressive to the long side. I prefer to see, say, we're going to pretend here for a moment, something like this, where we have the market already all green, and then we're producing 1, 2, 3, and say we produced another signal here somewhere, and then we get the 4th signal. That's how I prefer to see it. Let's see if I can actually find you an example. And I know sometimes I will take it, like if we had produced a 4-arrow consolidation here. Yeah, I see what you're saying, and it is a valid point. You could see it a little bit as a bull flag like that. Yeah, you might have something there, Scott. The problem we're having right now, of course, is this trading range. Any trade within this range is going to be a high risk trade, because the market is perfectly happy to hover here around, where are we sitting, around 43.20. Is that where our median line is at? No, it's actually above or below our support. Our median line is right here. But so long as we're stuck in this sideways range, we're kind of asking for it. What we need is we need to see the market get outside of this range and then give us a retest, and then we look to buy. Or we break down through the bottom, get the retest, then we sell. And we will get this retest, and the buy and sell signals will probably occur somewhere around here. But so long as it's range bound like this, you can pretty much flip a coin. And again, it's all the yellow bars, right? Whenever I see a bunch of yellow bars like this, if it wasn't for the sake of the trading room, I wouldn't even touch this. I wouldn't even be here. I'd be having breakfast right now. And I'd pop my head in the door maybe every 15, 20 minutes or so just to see if things have shaped up a little bit. Because try as we might, we cannot impose our will on the market. Okay, here we're getting a with trend signal now on the eagle, and it's coming off of this red bar buy, and it's generating near the top here. Not a bad looking signal. And there they are. They're going to press the highs. What's that going to cost me to be wrong? Ooh. Let's disengage that. Let's throw it below the swing. Well, the good news is that resistance area is solid. If we break above there, we're going to be tripping some stops. Oh, did I not submit my order? Oops, and now it's gone a little bit too far. All right, so we're pushing the top end of the trading range. Broken out a little bit, but wow, we're getting that reaction a little bit early. Not showing a lot of follow through at the moment, but it's getting better. Okay, this could be our first micro-macro cross signal. Now the deal with the first micro-macro cross is, where do we cover it? Well, I suppose it would make the most sense to cover it below here. So we'll take the second push. Maybe I'll cover it below the trend line down here. The eagle has run a little bit far for a second push entry. I wanted to get the second push in on this bar right here. See, when it came down here, it printed the signal, came way down here. That was the time I wanted to throw the buy order in, but unfortunately it kind of ran away on me a little bit. Okay, so the NQ here just trading high enough to tag us. Now here comes the possible pullback portion, right? This is we were talking about seeing a retest and then a rally. Now normally this part goes a little bit higher. Because it reacted so soon, well, it might actually drift into a macro line pullback. I'm kind of gauging my stops based on the trend line. Oh, sorry, I missed Hans's question. He asked, can you always place stop limit orders? In almost all markets, yes. There are a handful of markets that don't accept limit orders or straight limit orders. But yes, in most cases you should be able to place a stop limit, especially since so much of trading is electronic nowadays. Here the British pound on the Falcon might be giving us a trend change signal, but this too, look at this, looking like a roller coaster. Here's the down, here's the up, working on the down. We don't have the signal print just yet. We have just the warning dots. And if I shoot a trend line below here, you can kind of see where the problem is at. I can anticipate an entry, for a couple more ticks. I can enter below the low of this bar here. That might suit me a little bit better. So there's possible trade on the British pound. It's definitely wedging up though, right? It's lower highs, higher lows. Definitely in a bit of a sideways pattern. All right, coming back with that red bar, so I'll just park that order. Hans is asking, it's a stupid question, but how can I scroll up my screen? I can't place a target, only a small target. No such thing as a stupid question, Hans. Okay, to adjust your screen, grab the vertical axis, left click, and pull it. And you'll be able to adjust your screen however you want. You're going to see this little F appear in the top right. That is your auto format button. So when you click that, once you're done, it will automatically reformat the screen. to its maximum, or I suppose to the preset scaling. Oh, here's a red bar buy signal coming right back at this red bar buy signal. Oh my gosh, this is a terribly choppy market. Even for a Friday. Phil's gone off to bed. He's down in Australia. I don't blame you, Phil. It is a crappy day today. So here was the red bar buy. Remember, you can set it up as a counter trend. Look at this. We're not seeing any follow through one way or the other. No follow through higher, no follow through lower. Even crude oil dipped a little here off of the green bar sell, off of the hard edge. Not quite as easy to decipher because our band was just starting to turn over. You can see this is on the QM, the mini crude market. And you see how our session break lines are here, how they're getting a little bit close together. I would consider rolling this down to 10 on the Eagle. Let's see how that looks. Okay, you see how it gives you a little bit more room. There was Wednesday's session. Yeah, that's Wednesday's session. I don't think I would roll this much lower than 10 though. I would avoid the temptation to go to 8. But you see here this green bar sell looks a little bit more inviting. Our band has already flipped over. We hit the hard edge, green bar sell, and so far half decent follow through. Hans is asking about the tick sizes on the Raptor. I go with the default tick sizes. Hans is asking about tick sizes for the YM, the NQ, crude oil, and the DAX. I stay with the defaults pretty much across the board. Okay, this is a little bit more like it. So a huge failure off of that red bar sell, or red bar buy, pardon me. Here we are with the first micro macro cross way down here. Well, you know the problem with that first micro macro cross is the market may retreat all the way here to the macro line. Now it looks like it is in a running mood today. So let's see if we can't nurse that a little bit. So this, you see how this breakout differs from this breakout here? See, this is the kind of breakout that's a serious breakout outside of the trading range. This tells you that, yeah, okay, it looks like the market is ready to head lower today. This one, that quick little failure after the breakout, that's a bull trap, essentially, is what that is. All right, so I'm adjusting my order here. Again, the problem we're having, because we're heading straight up, is sometimes the market, makes a little stutter step like this, just enough to bring us in, and then it continues to retreat into a macro pullback. Just so that you're aware of that. That's why I'm going to try to run my stop a little bit deeper, even though this is still technically a first micro macro cross signal. So there's the old support. Yes, Hans is asking, the defaults are 8? Yes, they are. 8 ticks for the brick size, for your mean Renko brick size. 10 ticks on the filter. I would recommend 10 ticks on the filter. 6 ticks on the bars, and 12 ticks on the cloud. So pretty much the same way it came loaded. And here we've got the pound coming back with our trend change signal now. Oh, this lack of momentum here in the pound is not inviting. So you get that sideways type formation. You see it here too on the eagle. It's perhaps a little bit more obvious here on the eagle. Trading green bar sells with red bar buys. Both strong signals. Okay, and we're getting signals here on the Falcon and the Raptor at the same time. So here was our Falcon signal. Looks like we might get a chance at a second push. Oh, didn't get a chance on a second push there. Shoot, it's already run a bit. Well, the hazards of being a room moderator. Can't show stuff and trade very well. Okay, this is definitely enough to get this trade to break even right now. And let's see what the stop strategy is looking like. Well, 100 and change in open profit on the Hawk. Not a bad looking signal. Here's the pound. Look at this. Still waffling. So moving away from the bottom end, now working on an early trend change signal to the upside. All right, here they are challenging the top end. And they put on the brakes. Okay, so seeing what we just saw on the NQ, if this breakout fails, what do you think? Would it be prudent to buy? Maybe not. If this is the best that they can do, And don't forget, some traders won't necessarily see it just as a wedge. Some traders will be seeing it more as just a flat resistance area, which it is also. Okay, Hans is full of questions. Here we go. Hans is asking, my trade manager is always giving me 5 contracts, but I only want to trade 1 contract. How do I do that? Well, Hans, you go here into manual mode where it says risk, click on manual, and that will default to whatever quantity you have set up there. By default, it's 1 tick. And then no matter where you place your stop, you will always have 1 contract. So here's a macro pullback signal now. In the NQ. And it continues to retreat. Okay, this is a big deal for this market. This is a crunch spot. So even though it's a macro pullback signal, it's a high probability signal. We should see a test of the extreme and so on and so forth. Oh, now we're getting into yellow bars. So I can cancel that. Oh, and now we're working on a green bar sell of all things. The market is making a major reaction to this decline down here. We should have seen this swing high hold. It's still very, very close. We're back into yellow bars. I'm going to scrub the order. Are we getting a trend change signal yet? Oh, we are. Very close. Almost back into the hard edge here on the eagle. Oh, all this waffling. Okay, so right back to the breakout area. See, those lows right here should hold the market down. If they don't, well, they're going to drift right back into this whole trading range, maybe get back up to the highs even. We should see a test of the extreme, but we don't really have a signal yet. In fact, across the board, we're kind of sucking wind in the signal department. Here's crude oil, or the mini crude. We're getting a first micro macro cross lower. Shoot, crude oil. Okay, working on a possible first micro macro cross, but I don't know if I want to enter it right here where the hash mark's going to print. The hash mark's going to be right there. I think I would prefer to take it above the high, even though, yes, I know I'm offering up a lot of open profit. The upside is I can run my stop a little bit tighter. What has me concerned is, the market was obviously strong enough to get through this support, get to the bottom side of the range. Here we are retesting. We should see the market try to move lower from here, and yet I'm getting a buy signal. So again, one of these places, and this is how the NQ was the latter part of last week, where we're getting conflicting signals. We're getting buy signals or possible buy signals in the Hawk, possible buy signal building here in the Falcon, and then we're getting sell signals in the Eagle and sometimes even the Raptor. So it's making for a little bit of a mess. All right, the problem with the first micro macro cross the way it's building now is where I have my entry. If I took the signal right here, I'd actually be at my profit objective already before I even get entry. Okay, I think we're getting a swing signal building. We've got the warning dots. This is setting up to be a trend change signal. And it seems to be the direction that the market paid off in a big way today is to the downside. We had that rather substantial move lower. Makes me a little bit more open to selling today. Okay, the hawk now back into yellow bars. The eagle working on a with trend signal. I would probably refrain entry until we get on the other side of the ATR line. Covering above the swing high would be the bare minimum. It might be more aggressive with the stops on this one too. The problem is this a test of the extreme that we're going to see move lower, or is it a resumption of the trend? What a mess of signals. None of it looking especially appealing at the moment. The big challenge for this market now is this swing low right down here around 42.98, give or take. You can see how the market's reversed from here. A little bit of another push lower, reversed in a big way. Market came screaming down, put the brakes on again. A little bit of a hiccup to practically the exact same price. Sellers jump on it again. Hopefully this time they'll press on through. Well, they have to, or they're going to lose control of the market. Simple as that. Oh, the joys of trying to trade in range. A red bar buy signal, which we're seeing too many of these counter trend signals today. So there's a red bar buy that looks like it's just about to hit its profit objective. And of course, you can always set up to sell the failure of the red bar buy also. They're taking back the full ranges. What I mean to say is they make a move down, they make a corresponding move up. They make a move down, they make a corresponding move up. See, it's taking back all the previous gains, either higher or lower. It's it's maddening is what it is. Hans is asking about add-ons. What do I consider to be the best add-on? Well, he's asking about Ultimate Support and Resistance Suite. I am a big fan of the Ultimate Support and Resistance Suite, I have to admit. I only place it on the Falcon because, well, I can reference it from the other charts as well. But, you know, I know we're trading below primary support. I know this market should be bearish today. If we get back above the primary support, well, then we're likely to see it rally here to the median line. So I'm quite proud of these. I think they worked out very well. Do you need them? No. However, if you find them useful, you know, I know when Omar was doing the Forex room, he really liked the support and resistance suite. It would confirm his signals. He would use them as profit targets. So definitely one of my favorite add-ons. We also have the Trade Forecaster, which is telling us that we should be in trend mode for about the next hour. I sure hope so. And then the Day Ranger, which is also helpful because the Day Ranger gives you the average daily ranges. And so you can use this information to help place profit targets or refine your profit targets and your stop losses. So for instance, it looks like the daily range is building. From 30 days ago, it was 100 and just shy of 160, and now it seems to be hovering around 200. So knowing that, let's say I wanted to run 10% of the daily range as a stop loss. Well, you could go here to your fixed strategy, and you could say I'm going to run a 20-tick stop off of the higher low. So let's run it off of the low, and you can see if I accept it, you can see it's up here, but I want it below the market, so I'm going to put a negative 20, and that's going to flip it down there, you see? So let's say we take this first micro-macro cross signal. I'm going to take it late just to demonstrate it here. Now I've offered up 10% of the daily range as my stop loss. And I can do the same thing. I can say, well, what if I want 10% of the daily range as a profit target. That seems fairly reasonable. Or whatever, if you want to offer up 20% or 25% or so on and so forth. So the day ranger is helpful that way. And then there's James' first hour lines. And you can, this is actually a free indicator that Jim developed. It's at the NinjaTrader website under indicators, or you can email me and I will forward a copy to you. And what it does is it highlights the first hour of trading, the first hour's high and low. And you can see how often the market will tend to respect those regions. So very insightful and very generous of Jim to make that available. All right, so waffling is the word du jour. The pound's starting to hit the skids a bit. The QM very slow. I'm going to flip over to the CL again, see what's going on there. Huh. Crude oil more active than the mini crude oil market, but it too is not really going anywhere. So nothing to be gained by watching crude oil at the moment. Okay, Hans is asking about order placement. He says, I notice when I place an order near the hash mark that something goes wrong with the order. Chances are that the market has already moved past your order. So for instance, if I wanted to place a buy order, we're just pretending now. I want to place a buy order here. The market's already trading up here. See where the red mark is. If I click submit, it's not going to let me do that because I need to place the buy order has to be above the market. Now when you get your warning dots, that's when you can start anticipating an entry signal. Right, so you're getting your warning dot. I've got the Trailblazer on the Raptor here, so I have to enter my orders manually by right-clicking on the chart. But what I do with the Trailblazer, because these orders are live, as soon as I put them on the chart, I place them away from the market and then I'll drag them into where I want them to be. You can see our warning dot. It keeps appearing and disappearing depending on whether the market trades a tick higher or lower. But if you have the Trailblazer, that's one way that you can handle it. With the trade manager itself, once you place the order on the chart, you can't, you can't adjust it. So let's say you do it like that. You can't adjust that pending order, right? It's stuck. So I'm getting a warning dot here, possible trend change signal higher. With my logic counter, I can anticipate where the hash mark might print, or I can just wait a little bit for the hash mark to print. And we're not getting very much right now. Notice that if you are using the fixed tick strategy for your stops, even though the ticks may print lower because it's printing off of the low, Trade Manager continues to hold your stop. It's not going to bounce your stop all around. Otherwise, you'd never get stopped out. Okay, Hans is asking, well, if you can't anticipate or if you can't change the order once it's on the chart, what should you do? Well, the best thing to do, Hans, is to anticipate the order. Well, sure, I can do it on this one here. Okay, let's just close that out. All right, so I'm getting warning dots, and I can tell from my logic counter where this bar will finish. So I continue to get warning dots. So what I can do is, I know the bar is going to finish here at 43.1650. The hash mark will print one tick higher, 43.1675. I can just anticipate the hash mark. So I'll throw my order in there, I'll put my stop down there, and then I can submit the order. So I find that's the easiest thing to do, is just to anticipate where the order will print. And you can do the same thing here with your Raptor tool also, because you will get the warning dots. You can anticipate the hash mark. The hash mark will always go one tick above or below the signal bar. So the signal bar is the one with the triangle and the hash mark. So we'll watch the Raptor a little bit here, and I'll do the same thing. We'll go with the fixed tick, and let's say I'm going to run 20 ticks off of the low. And you see how it's on the wrong side of the market, so I throw a minus sign in front of the number. And we'll see here if we get a signal brewing. Yes, your order will be locked, then Hans. Hans says, but then your order is locked. What if the market changes? Well, then you simply cancel your order and do it again. So let's say the market changes its parameters. I clear the setup and I change the settings depending on whatever the market is doing. So let's see here on, and I'm just using the hawk because it's generating signals more frequently. Oh, you know what I should do is, let's go back to crude oil because it might move a little faster. Okay, so here's crude oil, and it's generating a first micro-macro cross signal. So I'm going to place my order here and my stop there. Oh, wait, give me my target. Oh, too expensive. Let's go back to 2%. Okay, now if this market retreats, come on down, come on crude, I'm trying to make a point. All right, it didn't retreat, but let's say it moved away from my position and the order wasn't live. I would simply cancel the order either with the close button or with the set prices button, and I would readjust the order. Okay, let's see if we can't do this again. And in the meantime, I'm going to so when you make changes to your trade manager, first thing you need to do is disable it. And I want to have tick targets. I want to have 2% volatility. And I'll make this a little bit bigger so it's easier for you to see. I'm going to save that as my hawk. All right, when everything is the way I want it, then I go back here to enabled to turn it on to true. And now it should have all my settings. Okay, so we don't have a signal here, but we're pretending so that I can illustrate this point. So let's say I had a signal there and I was setting up to buy. And let's see if crude oil doesn't head any lower. So now the signal is locked, right? I submit the order. I can't change anything. It's all stuck. When the order goes live, I can move my profit targets and my stop losses, but right now, the way it is, I can't move anything. It won't let me. So come on down, crude. I'm trying to make a point here. Oh boy, come on. Here we go. Okay. So now it's starting to move lower. Let's say my entry parameters are moving lower. Well, all I would do is I could either click the X, I can hit close, or I can hit set prices, any of which will change that, and then I reset my order, right? And I keep doing that as often as I need until the market either fills me or the trade parameters change and I no longer want to take the trade. So that's how you do it with your trade manager. You just essentially follow the market down or up, whatever the case may be. Hans is asking, when you have a direct buy stop order, how do you place a stop loss and target after? Okay, I think what you're asking Oh, I should do it on the trade manager. I think what you're asking is if you manually entered an order, is that right? Or if I just hit the buy market button, so I buy the market, how do I place a stop loss? Well, if your stop loss is enabled when you do that, Trade Manager will automatically give you a stop loss. See that? So I hit the buy market, Trade Manager, so long as my stop is enabled, it will automatically give me a stop loss there. Now let's say you don't have the stop enabled and you hit the buy market button. You can either enable your stops and click accept, and then Trade Manager will automatically give you a stop there. Your profit target is a little bit different. Oh, the other thing you can do is, so let's say you buy the market, you can right click and manually enter a stop. So now you have a stop in place. And if you want Trade Manager to take it over, well, once again, you need to enable your stops and click accept, and then it will automatically, well, actually, you can cancel that one then. As soon as you click accept on your Trade Manager, it will automatically give you a stop. That's the easiest way to do it. Your profit target is a little different. You need to right click on your chart, and then you can enter your profit target. And these, of course, you can move wherever you want them to be. So if you hit the buy or sell market buttons and you don't have a stop in play, just enable your Trade Manager, click accept, and you will have a stop in play. So a little bit of a trend change signal here to the upside in the NASDAQ. Looks like they're going to perhaps try to make a run here to the median line and the highs of the day. Imagine that, taking back everything they gave this morning. Just a crazy kind of day today, folks. All right, this trade is far enough along that I would definitely bring it to break even now. And as it gets closer to the highs, I might employ a different stop strategy, perhaps something more aggressive like the parabolics. Let's preview the parabolics. Oh, they're right about a break even now. Maybe I'll go with the parabolics then. Nice thing about the parabolics is they will get, as the market slows and tries to reverse, they will get more aggressive. So they're very good at capturing open profit, or as much open profit as possible, most times. You can see on this move lower here, parabolics did an exceptional job of keeping you in that trade without leaving too much open profit at risk. And now they're going to make a liar out of me. Oh, maybe not. Just a reminder for everyone that this is our last trading room for the spring. I'm going to take a little bit of a break. I've got lessons and coaching and things of that nature to deal with. So for the probably for the next month, we're not going to have a daily trading room. We will still have the Wednesday morning open house if you'd like to attend there. And then probably so we're taking April off, so probably in May sometime we will fire up the trading room again. And everybody will get notice of that. You will receive email updates, of course. And I'm always available via email also. Yeah, like Han says, time to practice with this new program. Absolutely. If you have any questions, you can email me at eric@supportandresistance.com. James is asking, Eric, is there any way you guys could have a chat room for us to trade in? I'm going to mention it to Adam. I'm not sure of the logistics of it. I like the idea. I will find out. Hans likes the chat room idea too. I do too. I think it's a great idea. It's just the logistics of it, how we're going to make it work. So we're back near the highs, and now they're starting to stumble a little. Hans says, I missed the room already. Oh, not to worry. I won't be gone that long. I'm just so terribly behind in some of my other commitments. I've got people after me for coaching, and market hours, most of the market hours I spend a lot of the time here in the trading room. Yeah, Hans says he's already addicted. All right, well, we'll hang with the room a little bit longer, see if we get anything shaping up here. Crude oil perhaps flashing us a green bar sell signal. Even that would be on the eagle. So we've encountered the hard edge. Coming back with a green bar and a sell. Problem here is that we have a bullish looking hawk and falcon. So either the eagle is picking up on something that the other two aren't, not yet anyway. The signal hasn't printed yet. We merely have the warning dot. We don't have the triangle and hash mark at the moment. But we do know that these green bar sell signals tend to be fairly reliable. One of our higher probability signals on the eagle. Well, so far the parabolic's doing a fine job holding us in. Oh, that one's got a substantial amount of open profit. Nice to see. So we'll see whether they can actually press through and get here to the high of the day. The market fairly subdued for the most part, even crude oil, which tends to be a little bit more active than most, but not today. I'm just snooping around different markets, but nothing really out there at the moment. Maybe I should take a look at the grains. I haven't looked at the grain markets. Well, let's take a look at soybeans. I'm just flipping through these here. So far, nothing really of interest. And the NQ trying to press higher, get to those daily highs right up here near the median line on our support and resistance suite. Well, soybeans fell off somewhat today. Not a major decline, but here is the soybean market on the Eagle. And we had a green bar sell here shortly after the market opened. And it's plotted a little bit lower. The nice thing about the grain markets is that very often once they settle on a direction, they will stick to it. Well, there we go. Had a little bit of follow through on that. So that was our trend change signal here on the Falcon, which occurred right about here. The market taking some support off of the primary support line, bouncing up to the median line. If it gets through the median line here, it will likely move up here to the primary resistance line. If you are trading the support and resistance suite, you're going to notice that when the market reacts to one line, it will usually move two. It will usually move two zones. So as it bounced here off of the median line, it wasn't a real surprise to see it fall here to the first secondary support line. Here on the Raptor, we had our first trend change signal. So the band flips over. This is our first signal, tends to be a high probability signal, and you can see we had some good follow through on that one also. And now they're putting the brakes on again. Well, that might be a nice way to finish off the session today. If you are continuing to trade this afternoon, well, honestly, your guess is as good as mine, where we've recovered the gains from this morning. We saw the market come down. It's come all the way back, pretty much where, well, not quite where the day began, but certainly the high of the day. I still like the market short. I don't know. I can't help it. But really, the way it is right now, you could treat this just as a large trading range, really. And if the market gets outside of this range, look for that test, retest type scenario. And if it happens to retreat, or even if it happens to do one of these like we saw earlier, if it gets through, fails, you will have a retest, and we might even see prices fall back somewhere near the low. But I have a feeling that they're done. I think that they're done for a Friday. Could be wrong. Sometimes if there's no reason for them to rally, the gravity will just pull them lower, just the lack of momentum. But either way, I think caution is in order. Crude oil looks like it might rally just a little bit, but there too, I wouldn't get too excited. Crude oil seems perfectly happy to be trading around $50 a barrel. All right, you guys have, well, be careful. If you have any questions, you know you can always get a hold of me via email, and watch your inbox for notification of when the trading room starts up again. And until then, we'll talk to you later. Bye for now.